man. Hey, chida de muhani. Tamba chekwani na segere. Rutiti luna jasi. Ndeni. Hi everyone. Welcome back to my YouTube channel. This is Furuperani Mashapa. Ngwananyana wa Muvenda. To those who are new in this channel, welcome. To those who are returning subscribers, you know I love you. You know I love you. Thank you so much for coming back for yet another exciting, informative episode of Risk, Money and Investments, right? It's been an interesting journey and thank you so much for subscribing. If you haven't subscribed, do the right thing. Please subscribe. Subscriptions are free. Subscribe and also tell your friends, tell their friends to also come and subscribe the video as well. In order for it to be recommended to other people and for us to reach a wider audience, right? Because at the end of the day, this thing is not just within our circles, but we want to reach other circles that are outside our circles. So yes, like the video so that it gets recommended to other people. Last video we were talking about emergency funds, right? And in this video we have set up our emergency fund. We are all sorted, we are good. We are now moving to the next step, right? You know, there are levels in this thing. It's a levels in life. Now we are moving on to investments, right? Disclaimer, contents of this video do not constitute as financial advice. So if you need financial advice, please speak to your financial advisor. Okay, cool. Today we are talking investments, right? A good place to start will be, what are investments, right? For me, investments is you making your money work for you. That's it. It's a way that you make your money work for you. And how do you do that? You can do that through buying of assets, right? For example, stocks, bonds. You invest in mutual funds. You can invest in unit trust as well. You can invest in investment trusts as well. So you can invest in different things with the hope or the expectation that your money will grow over time. Those are investments. And an important thing to note is you don't just start investing without a goal. You need to have an investment goal, a long-term investment goal to say, why am I investing, right? There are different reasons as to why people invest. For example, someone might say, I have a newborn baby. Hi. So if I have a newborn baby, this baby would need money when they go to school. So I am essentially investing 200 rands a month in order to save up enough money for my kid when they go to school. Before you even start off investing, because I feel many people do it because the bandwagon, you know, everyone has got easy equities. Now I also want to be part of the bandwagon. So I'm going to take my money, invest in easy equities because everybody else is doing it. So that's the wrong way to go about it. Have a long-term investment goal and also have a time frame to that goal to say, I want to achieve this by this time. It's very important because if you don't have a goal, then it will be easy for you to stop doing it. If you don't have the why that's pushing you to invest, then you might as well just yekela for other people, leave it for other people. But anyways, there are essentially two ways, right, which you can invest your money in South Africa today. But I feel like it's all over the world, honestly. So the first one is what we call direct investment, right? And the second one is indirect investment. So I will just decode the two and then give you guys an idea to say at the end of the day, hey, different strokes for different folks. So if you feel you're the direct investment person, go ahead by all means. We are not stopping you. And if you feel you're the indirect person, investment person, then hey, good for you. So let's start with direct investment, right? So in direct investment, you are essentially the investment manager. What do we mean by that? You as an individual, you register maybe with a certain platform, right? For example, Easy Equities or Acorn or Build Wealth, or there's so many of them, Robins or like Stockpile, whatever app you're using in order for you to just gain access into that platform that allows you to invest in different stocks or in different assets, right? You tap into that space and you get to decide where you want to invest your money. You get to decide how much you want to invest in each different stock, and you also get to decide how you build up your portfolio, right? So essentially, you are the investment manager in your own life, you know? And the good part about that is you don't need to now pay someone else to manage your money for you. You stress about your own money and you do whatever you want with your own money, but it has to still be aligned with your long-term goal, right? Cool. And then there's the second one, right, which is indirect investment. So indirect investment, it's like you recognize that managing your investment directly, like you trading, changing your asset holdings and things, that can be very tricky, especially if you don't have the skills or the expertise, which I believe a lot of people actually don't. The skills, the expertise, and the experience to do that. Then you entrust your money with a certain investment company, right? There are different investment companies in South Africa. As I was thinking about it, I was like, they don't do adverts. These companies don't do adverts. They're not on TV. It's like they are there, but they're not there. You get what I mean? They're there, but they're not there. But I will just give you guys a few of them. Like you have your Coronation, there's Prudential Authority, there's Old Mutual Investment Group, there's Allen Gray as well, Alexandra Forbes. Like the list goes on, right? These are like the big players in the investment space for private investors, so you and me. So now you give them the money, right, to actually invest for you. So you essentially pay them to stress about your money. And what you do in the meantime, you relax and wait for them to stress about your money. That's all you do. But definitely, since you're tapping into their expertise, you're tapping into their skills, they, of course, will need a little bit of something for doing that. So they will charge you like management fees, annual management fees. Normally, the annual management fee won't be greater than 3% of your total fund investment. So that is great. You can just, forego that 3% and allow someone else to stress about your money. Okay, cool. Now, just to wrap up this video, I think it will be a good idea to just now dissect direct investment and say, what are the pros and what are the cons, and do the same for indirect investment as well, right? So for direct investment, I think the big con is the fact that a lot of people don't have the skills and the expertise to choose the right investments, to choose the right stocks or choose the right bonds, whatever it is that you're buying. So even if you say, I'm not going to do it via an app, I will do it through the Johannesburg Stock Exchange. Not all of us have the expertise to actually know which stocks to buy. And you find that, especially in the first few years of someone learning how to trade, it's honestly, if they're making money, it's honestly because of luck. Like, it's not experience, it's not anything. It's just like, whoa, I invested and now it has grown, because they don't have the expertise, right? And so that's I feel like that's a big con, because you not having the right expertise to do the investments, that is very dangerous. It can lead to you like literally losing your money, right? Because you just don't know where to invest. And also, it's very important for you to build a well-diversified portfolio as well. So it's quite tricky to know what proportions to invest in certain assets, or which assets should I actually have in my portfolio. So I feel that is like the biggest con when it comes to direct investment. But on the upside, you get to choose. You have the freedom to actually choose where to invest your money, how to invest your money, and for how long. So all of that, it's totally up to you. You decide, when do I sell and when do I buy? So Everything is up to you, but do you have the skills? And if you don't have the skills, then it means you need to now spend time learning about the stock markets, learning about investing. How do I build a well diversified portfolio? And you just need to invest more time doing that. Okay, cool. Now, coming to indirect investment, right? So this one, the biggest pro for me when it comes to this one is that I have someone worrying about my money. I don't have to worry about stock markets moving up and down and targets not being met. So you put that risk in that, you put literally that burden on someone else and not you. And you also now tapping into their expertise. And with how this investment companies work is that they will give you like different fund options, right? So there might be, for example, if it's Allen Gray, there might be a fund that invests in equities. There might be a fund that invests in property. There might be a fund that invests in like your exchange traded funds, for example, right? ETFs. So there are those different, you have those different investment options. And what I love is that when you're saying you're investing in fund number one, which is like equities, that portfolio which you will invest in is already diversified. You don't have to worry about is this portfolio diversified, which assets should I put in this portfolio. They worry about that for you. And these are the people with experience. These are the people with like, knowledge about investment markets. They've been in the field for a while. So tapping into their skill is essential. And then the con will just be the fact that you won't have control over which assets you actually invest in. You won't have control over how much management fees they're going to charge. Unfortunately, that will be stipulated in what we call a fact sheet. So the fact sheet will show you the past performance, what funds are available, and also like what are the projected returns, growth or fund growth in the future, right? And so that's very important. So before you decide if you're going to go the indirect investment route, before you decide, right, that you're going for this company, I think it's worthwhile to just review the fact sheets from the different investment companies. If you go onto their website, it's probably going to be there. They will show you like what products or what funds are available for you to invest in. And you need to really, I think the two main things to really understand if you're going for the indirect investment route, which I believe if you don't have the expertise and you don't want to find yourself trading, you must go for, is to really understand the fund structure, right? To understand like what am I really investing in and what are the projected returns in the future. And just a disclaimer, just because they projected that it's going to be 6% doesn't mean it's going to be 6% in future, right? So you must take into account that. You must also take into account your risk appetite, right? Like how much risk are you willing to actually take? If you are someone who's like risk seeking, right? You might say, I just want to invest in equities. I know they're quite volatile, they're hard, they're very risky, but I just want to invest in equities. But if you think that if you're risk averse, you don't like risk, then you might as well go for like your investments that are very much less risky, like your money market investments, for example. Or you might just ask them like, okay, I don't want to lose my money, or I'm very much risk averse, so what type of fund would you recommend? And I'll definitely say ask as many questions as you can. If there's one thing that kills us as people, is that sometimes we just don't want to admit that we don't know. If I'm going to buy a product from someone, I make it a point that I ask a lot of questions as I can for me to understand what type of risk am I literally taking by actually owning this product. I need to understand that first. And it's very important, whether you're buying car insurance, whether you're buying a life insurance product, whether you're investing, just ask them a lot of questions as possible, because this is your money at the end of the day. You don't want to gamble with your money. That's all I have for you guys in this video, right? And thank you so much for subscribing. Thank you so much for your time. And I hope to bring more conversations about money, risk, and investments. Money, risk, and insurance, sorry, in future, right? And yeah, thank you so much. Thank you so much. Don't forget to like, comment, share, and subscribe. Put your comments down below, right? What sort of investments do you guys actually have? What are you investing in? Has it been working so far, or have you been making losses? Just, I want to hear all about it in the comments section. And I love you guys so much. Until next time, oh, bye.